Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, September the 3rd, the year's 2019. Let's talk trading. Stop. That's right. You need to stop. You need to stop a lot of different things. You need to stop looking for those miracles when it comes to trading. You need to stop believing all those things that aren't really true about trading. You need to stop thinking, that if you just change this one indicator a little bit, or that somehow your trading's going to become profitable when it's not. No, you need to stop the nonsense. And there's so many traders out there that are engaged in nonsense. I mean, trading is very simple. You're buying, you're selling, okay? You are in a speculation game, because if you don't know what the outcome's going to be ahead of time, you are speculating. Yes, it's a lot like gambling, but there are differences. Point being, I get emails from different traders, or requests to change this and change that. And it's like this one trader is looking at some buy zone code that must be, geez, over a decade old, 10 years or something. They wanted, it's like, and I told him, I go, look, you need to learn the method so well, you don't need the indicator. I mean, I want you to think about it. If you should be able to trade without the indicator because you know the method so well. Now, you might have to do some hand calculations, or do some calculations on your calculator or cell phone or something, or, have a spreadsheet. But the thing is, you know the method so well that you don't need the indicator. Now, that may sound funny from some guy that's written probably at least 1,000 indicators, right? But the point being is that I can trade just about any method without the indicator. I mean, even pivots. It's like I can calculate the pivot. I look at yesterday's high, low, close, divide that number by 3, round up or down, and I know where today's open is. I know which way to trade. I mean, I don't even really need to pinpoint it, yes, but I can look at the chart, pretty much guess where the pivot is, if it's going to be higher, or lower than the midpoint, because I can pretty much eyeball that one too. But the point being is you got to stop the nonsense. You got to stop focusing on things that really don't matter. Don't major in the minor stuff. So that is the message. Maybe that's the message for the rest of the year here, or for forever. Just stop going for all that goofy stuff. And there are people out there willing to sell you a lot of goofy stuff. I mean, I was listening to a podcast or video, a couple of traders. One of the guys, I get stuff almost on a daily basis, if not twice a day sometimes. And and they're just basically to me talking nonsense. Oh, if I have this, Ishi Mishi or indicator that's modified, or Heiken Ashi, it's just like, look, if you can't trade with the normal candlesticks or bar charts, once again, you just need to stop that nonsense. But you know what? If those methods work for you, then continue on, carry on. My wayward trader, carry on. um, so let's get into it. But there's something that you better not stop, and you better not stop using your risk and money management. Now, I want you traders to remember that, these videos for educational purposes only, and that your results may differ from mine. and that you always keep in mind that Forex trading is just like any other uh, trading arena is very, very, very risky. So if you need financial advice, seek it from an accredited financial professional rather than some person talking to you via the internet. Because at least that way, when you have a financial professional, accredited financial professional lose your money, you can rest easy that it was a professional that lost your money as opposed to some guy listening to some guy on YouTube, right? Anyway, we had a couple of gaps that hadn't filled yesterday, but as you can see, once again, the weekly gap fill paid off. Very simple, but you know, and for example, now here's a trade you don't need an indicator for. I mean, this was the open. This was the close. You see it gap down. If you trade it long, there was what, about, at least 16 pips to be made. And then if you maybe made a couple of more pips beyond that. Don't need an indicator. Okay, so the dollar yen here, we can see everything is just red, red year, red month, red week, red day, right? It's just all red. 33 pips below the daily open at the moment. In fact, we just had a big red candle this hour. Now here's another trade. You don't need the indicator. Here's the opening range right here. This is the Monday candle. You see the high of the Monday, the low, and it's like, hey, when it comes down to here, you go short, goes up to there, you go long. You don't need an indicator. It's very, very, very simple. Okay, first trading day. Oh, you know what? I forgot to switch this over to, let me just go ahead and do that right here, right now. And maybe I can remember to save the template when I get done here. Scroll down. And let's see, if I remember correctly, September 2nd was the first trading day. There. Below everything, right? And ditto for this one. The range, plot by date. But do you really need this indicator? Well, whoops, 2019.2. I mean, do you really need this indicator? I mean, all you got to do is look at the monthly and you can see, oh yeah, it's below all the opens. Inside bar, once again, do you really need the indicator? See, you look at the inside bar, you look at the high, look at the low, you could put them on a scratch piece of paper. Price gets to this point, you go short right there, paid off 27 pips. This is not difficult. It really isn't. It really isn't that difficult. But people are going to be worried about the indicator. You don't need to worry. You need to learn the method. Okay, the range now, yeah, if you want to look at multiple pairs, yeah, it's nice to have the indicator so you don't have to calculate. But it's simply high minus low. You got 1, 2, 3, 4, 5, 6, 7 pairs over 100. And once again, taking that breakout of the previous day's candle, right now you're good 8 pips, but you had a potential of 18. Not bad. The highest open, lowest open for the day, the week, the month. Okay, you can see here. You can just look. Okay, there's the lowest open right there. Guess what? We're going to have a new lowest open, I would assume, unless price zooms up about 15, 16 pips. It's not that difficult. You see here, there's the highest open. And you could just keep track with a scratch piece of paper if you want. The buy zone, the one that the guy was looking at, one of the older buy zones, but it's real simple. Buy zone. You use the daily open, and you can also use the weekly open if you want to trade off the week. But you know what the open is? Well, if price gets up to 8 pips above the open, you go long. You don't need a chart to tell you these things. Here we had the pivot point near the open, no bias. You took the long trade, you took the short trade, took the long trade here, took it there. Here it's telling you price didn't go up, scratch trade here. Same thing, you scratch that trade, you come down here, you take that short, and you had the Magilla. You took it, or you took the open cross, took the weekly open cross. Any of those paid off handsomely. Rats, green rats, get ready. Why am I using H1? Just to show you, you can just wait and just trade with the H1 candle color even when you're trading the rat zone. Pivots, we already showed, took out the pivot. Now, remember, in yesterday's video, I mentioned, look for the weekly pivot. It took it out, and now we need to look for the monthly pivot. I know some of you traders don't believe me, but that's okay. You can do trade as you wish, but you can see here missed pivots for the dollar yen. We only had one last month. See, statistics, there you go. It shows you. You don't have to believe me. You can see it with your own eyes. You can prove it to yourself. Price action. Once again, with the dollar yen, it's not always true that if it opens in the range between here and here that it will stay, it will leave that range. That was the euro. The euro Aussie, where is that? Right here. Remember, we were trading this. You can see here, because of the range, it'll do that. So that's how you learn how to pick your pairs, by using those. So for the method that you use, you pick the tool, you pick the pairs that work with the method, or you pick the method that works with the pairs. You don't just take one method. One size doesn't fit all. It fits some better than others. Okay, wick zone. Once again, in and out, simple. You don't even really, once again, you can use a daily chart, and you can see, you can go back here to the daily. Okay, price entered the wick zone, exited, entered the wick zone, and exited. Okay, see, it went up into the wick zone, then came back down through it, entered this wick zone, and then exited out the bottom. You don't need the indicators once you know the methods. Okay, yes, I pretty much came up with the methods, so maybe you think, well, you invented the methods. Of course, you don't need it. No, you can learn it. All you have to do is just learn it. You can see here we've had about 40 pips of range. That's why the price is scrunched like that. Einstein line, it proved to be a Magilla trade right there. You get those every now and then. Don't expect them on a regular recurring basis. And you see here, we almost hit the ATR range, but we did hit the ATR 8, or the open minus half of the ATR 8 right there. And then we had a reversal, showing how, once again, using the ATRs, the average trading range, which is close to the average range, just a slightly different calculation, but that works. So, fellow traders, just remember, just stop the nonsense, stop all that goofy stuff, and stop looking for things that, if you just found that one indicator or that one method, that it's going to, pave the path to riches, because it's not. Because remember, it's not what you trade, it's how you trade it. So get out there and drain the banks. And if you haven't subscribed, come down here and click subscribe and click on the bell. And we'll see you next time.